Welcome back to the GoldMining Swissie USDCHF series. Today, we're diving straight into week 31 of this long-term account recovery journey. Think of this explainer as another clinical chapter in a much larger ongoing documentary. We're tracking a highly calculated march out of a deep valley, and it's a fascinating look into the realities of systemic trading. So, let's get right into the data.
Tracking the progress for GoldMining Swissie account 1515, week 31 is really where recovery finds its footing. This isn't about those flashy overnight success stories you might see online. Instead, we're looking at the unvarnished reality of algorithmic trading in live markets. It takes supreme focus, absolute patience, and methodical progression.
To really get what's happening here, keep this in mind. Recovery is rarely linear. It's a systematic dismantling of drawdown through discipline. As we sift through this week's evidence, remember that climbing out of a deficit isn't a sprint. It demands highly controlled execution rather than some frantic chase for quick, rapid returns.
Moving right into part 1, the landscape of recovery. Let's zoom out for a second to set the stage.
To maintain absolute transparency, we always start with the lifetime balance and equity curves. The balance is tracking steadily upward, but notice that massive historical decline on the right side. It's practically a cliff. This is the exact hole the system is actively climbing out of. We aren't hiding from those major drops. We're studying exactly how the algorithm responds to them.
And to put a hard number on it, that lifetime maximum drawdown sits at 65.44%. It's a staggering figure, honestly. The system took a massive hit. And frankly, every single trade and every week of progress right now is entirely about rebuilding gradually from that specific heavy burden.
Let's look at part 2, week 31 market context, navigating the volatility.
The USDCHF market wasn't exactly sleeping this week. We saw some seriously heightened volatility. This was essentially a cocktail of shifting Federal Reserve policy expectations, incoming U.S. labor market data, and sudden movements in Treasury yields. All of this shook up currency values and created sharp, sudden price swings. Now, for a systemic algorithm, these swings are definitely a challenge. They heavily test open floating positions, but they're also an opportunity.
So how did the system actually fare? Well, it pulled off a modest but hard-earned positive net growth of 0.48% for the week. Sure, in the grand scheme, it's a relatively small step, but honestly, given that extreme market volatility, any positive ground gain during a recovery phase is a clear win.
Diving into the raw MT5 report, we can see those growth and drawdown dynamics play out. There's our steady 0.48% gain. But check out the floating drawdown, that unrealized risk on open trades. You can see how it briefly spiked up to 10.48% right in the middle of the week. That spike is the exact visual representation of the macroeconomic volatility stressing the account, right before the algorithm managed the positions and stabilized everything beautifully toward the end of the week.
It's really all about perspective. When you contrast that sharp, stabilizing weekly equity curve on the micro level against the massive lifetime equity chart on the macro level, it puts things into focus. A volatile, stressful week is truly just a tiny, stabilizing ripple in the much broader long-term recovery timeline.
All right, part 3, inside the trade history. Let's look at the actual mechanics of this week's profit.
Tracking the execution points on the M15 chart, you can visibly trace the sharp market drop, sliding down from the 0.817 level all the way to 0.807. But rather than getting caught out by this drop, the algorithm used that downward pressure to execute a managed recovery, finding exact opportunities within the slide to close out two specific sell positions.
Breaking down the raw math from the terminal gives us absolute clarity on how this played out. The system logged a gross profit of $294.68. But, trading isn't just about the wins. We had a gross loss of $185.29, and holding positions overnight brought broker swap fees of $99.58. When the dust finally settled, that one larger winning sell position perfectly offset the losing trade and the carrying costs, netting us exactly 9.81 cents.
Visually breaking down those metrics really drives the core philosophy home. Notice how much of the total action is just absorbing losses and swap fees. The actual net gain is small, literally the equivalent of finding a dime in your couch cushions. But that is the absolute essence of systemic trading. Whether an individual trade wins or loses matters far less than making sure the net result of the entire process stays positive. We're managing a portfolio here, not sweating over single tickets.
Which brings us to part 4. Transparency and lifetime stats.
Looking squarely at the lifetime growth versus drawdown progress, we have to acknowledge reality. Despite stringing together consecutive winning weeks, the lifetime growth is still sitting at negative 14.16%. The drawdown remains a prominent feature of this account's history. Again, we're keeping things totally transparent here to prove that this journey is a marathon and the job is still far from over.
But how the system climbs out matters just as much as getting out. Notice the controlled deposit load and the slow balance rebuilding. This gradual climb is achieved through incredibly strict risk management. The algorithm is intentionally avoiding that lethal trap of over-leveraging the account just to chase quick returns. It's all about slow, steady, and secure progress.
And finally, part 5, the road to 10,000, the ultimate goal.
Currently, the balance sits at exactly $2,052.29. That includes the very modest, hard-fought 9.81 cents added during week 31. It's a small number, sure, but it is higher than last week, and that's the point.
Why are we tracking every single cent so meticulously? Because the ultimate destination, the hard finish line for this recovery phase, is 10,000 cents. This account has to prove its resilience, rebuild its capital foundation completely, and hit that 10,000 cent mark prior to any kind of public copy trading launch. It is literally a live proving ground.
So, as we wrap up this explainer, it leaves us with one big question. As the markets keep shifting and central banks continue to surprise us, will this disciplined, algorithmic execution continue to outpace macroeconomic volatility on the slow road to 10,000 cents? We'll be watching closely to see how the system weathers the inevitable storms in week 32 and beyond. Until next time, stay focused.